Let's get right to the top 3 things that you need to know at 9 a.m. this morning here, as we're keeping a close eye on futures after disappointing results from tech giants Alphabet and Microsoft marked a rocky start to a big week for tech earnings and pointed to major slowdowns in the U.S. economy.
Alphabet reporting its 5th consecutive quarter of slowing sales growth, with YouTube posting the first drop in advertising revenue since the company began sharing those numbers.
And things are not looking much better for Microsoft. The company reported its worst quarterly slowdown in more than 2 years and warned of a sharp slowdown in its cloud business. Julie, let's hit that big board. What are you seeing in the pre-market?
Yeah, just to put a little bit more of a fine point here on what we're seeing. Obviously, things were much in the green yesterday. That's the color that you're seeing. But it's the numbers below that you want to pay attention to, because that's where we're seeing a lot of pain this morning. Just to run through them again quickly here, Google down some 6% in the pre-market session here. Microsoft off by 6.5%. Texas Instruments up here, up by 4%. But that's not the only red that you see. We are seeing really a ripple effect here as these large cap tech firms are striking fear into the hearts of investors in other names. Apple down 1%, Amazon down 3%, even Tesla getting caught up in this, even though there's not really an overlapping business here, but it's down 1.25%. Meta in particular, which reports after the close, is down 4%. Nvidia down 2.5%. You get the idea here, Soz, that because of these results and because of, there is some overlap between them, but there is enough differentiation that there are a lot of implications for a broad swath of technology in these numbers.
Hey, Julie, I get it, and I think the market gets it, but let's begin on Google. The tech company specifically called out weakness in ad sales, with YouTube seeing a drop in revenue for the quarter. Overall, Google's revenues saw the slowest growth rate since 2013. A lot of focus here on the YouTube ad slowdown. That tone on the conference call from Google last night, I think mirroring what we heard on the ad market from Snap just a couple days ago when it reported its earnings. But for me, the biggest story here of tech this year, and especially coming off a quarter like this, is the great Google belt tightening underway. To hear Sundar Pichai, the CEO of Google, hop in this current earnings call and say that they are reprioritizing investments, pulling back on projects, looking to grow headcount way slower in the fourth quarter is a huge story. I can't recall at a time outside the Great Recession when I've heard Google telling us they're going to slow down on hiring and cut back on projects.
Well, some of those other bets that the company continues to make is not going to pay off or be profitable for an extended period of time. And in some cases, on the self-driving parts of the business that they've invested heavily in, you think about Waymo, that's not going to be profitable until you've got even more regulatory red tape that's cut. So in the meantime, it is, as you mentioned, that belt tightening that they're going to be doing, and how the ads kind of sustain them between now and then for part of the business that is essentially 79% of their revenue base. It still comes down to advertising. And so when you do see only a 6% growth rate year over year, that is something that's alarming. And it really signals the pullback in spending among financial services, insurance, loan, and crypto segments that they've mentioned.
There was a refrain among the analyst commentary that sort of brought it home for me that Google is not immune, right? There was this thinking coming into this that because of its search business, that Alphabet's Google would be more resilient, more resistant, YouTube as well, to what's going on in broader technology, because it is not as exposed to what's going on with the Apple tracking changes among ads, because it has its own proprietary data from search, because of what goes on YouTube to some extent in the data it has there. And this quarter showed that's not necessarily the case. It does have some vulnerabilities to what is going on in the broader world.
And I'll say real quickly here, a lot of focus on operating margins. Brent Thill noting that operating margins for Google down 390 basis points quarter over quarter and 930 basis points year over year, which really speaks to the notion that they have to get these expenses under wraps. And if Google has to deal with this, best believe we're going to hear the same tone when Meta reports.